Welcome to another weekly market update. This week is a big news week in terms of job data, new home sales, as well as inflation. So let's go ahead and crack on into it. We're going to touch a little bit on the job data that we got, and that's mainly through the Business Employment Dynamics, QCEW, for Q4 of 2023. So what that does is that measures private sector job growth and job loss. And what they've reported is that the BLS has overstated job growth in Q4 2023 by 261,000 jobs. That's 87,000 jobs a month that the BLS has overstated in last quarter of last year. So keep that in mind, as Chad and I have both been saying that weakness in the job market is what's going to drive the rate cuts that we'll see later this year and into next year, as we don't expect to see much inflate, or let me rephrase that. We don't expect to see very helpful inflation data moving forward. It still will be lower than what we were seeing in 2022 and 2023. However, it's not going to be what leads to rate cuts going forward. As well as keep in mind that the BLS has already been revising their estimates from this year lower. So again, that birth-death model is largely and grossly overstated. And as we see that come back down to more correct figures, there will be more weakness in the job market that the Federal Reserve sees, and in turn will hopefully trigger a rate cut as we push over 4.1% unemployment. So let's go ahead and jump into the real meat and potatoes of this week's market update, and that is new home sales for the month of June. So as you can see here, the annualized sales pace is down month over month, and that is largely due to a slowdown that we've seen in the Northeast due to a lack of developable land, or developable land there, excuse me. But the real thing that's interesting here is the median home price as well as the inventory for the month of June. So as you can see here, median home price has increased month over month by 2.5% from the month of May, as well as inventory here has increased slightly. Now, this total inventory figure is very interesting to look at. That includes build permits that have been approved, as well as builds that are ongoing but have not been completed, as well as move-in ready homes. So by that margin, or by that mark, we're at 476,000 homes available on the market right now, and in terms of inventory. That gives us a monthly sales pace as well when you consider the annualized pace of 51,000 homes that sell per month. And if we factor in those two figures together, gives us a monthly supply of about 9.3 months. Now, again, keep in mind this total inventory factors in all types of homes, permits that haven't been started, builds that have been started but haven't been completed, and the real homes that are move-in ready. When we actually look at the move-in ready homes that are available on the market right now across our nation, that's 102,000 homes. So when we look at the monthly sales pace here, that gives us a monthly supply of just under 2 months. So again, Chad and I have been saying inventory has been a problem for the past few years. It's going to be a problem for the next 10 to 15 years. And as we see rates come down, those prices are going to continue rising sharply as more buyers flood into the market. Remember, for every 0.5% in interest, or every 0.5% we go lower in interest rate, another 500,000 buyers enter the market. So until we see those inventory figures get fixed over the next 10 to 15 years, the home prices are going to continue to rise. And I say it to everybody that I talk to, do not wait for those interest rates to come down, because you're going to be paying more for less home. You may save a little bit on the rate, but you're going to be losing out on the home. So stay diligent in your search. If there's anything we can do in terms of running numbers for you, offers going in, we can speak to the listing agents. Give us a call or a text at 312-731-4939. That's 312-731-4939 if you're in the Midwest. Or give us a call or text at 704-495-1869. That's 704-495-1869 if you're on the East Coast. Or email us at chat@thelubingroup.com. Hope you have a great rest of your week.